Hello, and welcome to the Consistent Profits Podcast, brought to you by Inside Out Trading and Brian McAvoy, where the focus is on consistency. Because when you have the consistent part down, profits become easy. Hello, everybody. This is Brian McAvoy with a new episode of the Consistent Profits Podcast. I'm excited today to be interviewing Rob Hanna, founder of quantifiableedges.com. Thanks so much for being here today, Rob.
Hi, Brian. Thanks for having me.
Hey, glad to have you, man. For everybody who's not familiar with Rob, he is well regarded in the financial community for his analytical approach to the stock market, investment strategies, and personal finance. He's been particularly noted for his expertise in quantitative analysis, where he uses statistical and computational methods to identify trading opportunities based on historical data. Rob's work involves examining market trends, volatility patterns, and other financial indicators to make informed trading and investment decisions. His reputation has been built on his ability to merge detailed historical market analysis with contemporary market conditions, offering insights that are both informed by past outcomes and relevant to current market participants. Rob began trading in the late 1990s. In 2001, he formed a private investment partnership that he ran through 2019. In 2019, he decided to shut that down and joined Capital Advisors 360. Since 2020, he served as an investment advisor with Capital Advisors and trades many of the models he developed over the years for himself and for his clients. Rob began sharing his research and ideas publicly back in 2003. In 2008, he established Quantifiable Edges. Through his writings, particularly in the Quantifiable Edges subscriber letters and online courses, he shared his extensive research, contributing valuable perspectives on market behavior, trading strategies, and risk management. The Quantifiable Edges subscriber letters, which compile over 16 years of financial research and insights, reflect Hanna's commitment to empirical analysis and his belief in the importance of historical context when making investment decisions. The research at Quantifiable Edges is a testament to his approach, combining rigorous analysis with practical strategies for traders and investors alike. In addition to being interviewed in numerous trading magazines and podcasts over the years, Rob has spoken to major conferences for the Market Technicians Association, the American Association of Professional Technical Analysts, the National Association of Active Investment Managers, among others. Rob's advice is often sought after by both individual and institutional investors for its clarity, depth, and the quantifiable edge it provides in navigating the complexities of the financial markets. Rob, thanks again for being here.
Thank you. Thanks so much for having me. That's a nice intro.
Yeah, well. You've been at this game for a while, and you've been a busy guy. You've done a lot of things and a lot of cool stuff. Now, as far as your start, one thing I always like to start with everybody, it's like before trading, what were you doing?
So, well, if I was always interested in trading, right? So, before I was a full-time trader, my first experience with trading was as an intern on a desk in New York. That was during college, so between my junior and senior year. I graduated in 1992 and didn't want to move to New York. I wanted to stay in Boston. And so I had a tough time finding a job initially. I did a few things, and I ended up with Thomson Investment Software, which was part of Thomson Financial at the time. Yeah. And I sold their, it was a financial accounting, and they did performance measurement and a little bit of trading out of it, not so much of that with most firms, but it was mostly back office software for firms. And I got to learn about the investment industry that way as well. It was it was a big sale. It normally took 6 months to a year to close a deal. Wow. And they'd run their whole back office on it. Right. So I did that for a few years. And then while I was doing that, I, continued to learn about the market, and I started trading on my own on the side mid to late 90s. And I traded, through the internet bubble. I did a little bit of day trading. I did a little bit of Investors Business Daily, the Can Slim type trading for a while there. Right. And I kind of developed my own methods and strategies, and then I started trading full time in 2001.
Huh. Cool. Well, so you kind of went, you kind of happen into it. No, I always have to ask because some people they come to trading from totally unrelated fields and occupations, and so sometimes it's just funny, and others it's like that's just kind of been a natural proclivity for them anyway. As it's like I kind of knew I was going to wind up in the financial industry in one form or another, and just happened to be trading. So, oh, but that's cool. Now, as far as um, so you work for you started Quantifiable Edges, and you were with Capital Advisors 360. Now, as far as becoming an investment advisor, that's more recent. Um, now, okay, so you started the private investment partnership in 2001. Now, was that your own firm, or was that one?
Yeah, so that was basically like a friends and family hedge fund,
Okay,
right? So it was hedge fund structure, and I had started off with like 10 or 12 investors and ran that for several years. And it was basically set up so that they'd be following my trading. And I did that for a long time with and I didn't grow it a whole heck of a lot. Um, Primarily because I enjoyed working on my own and doing my own trading. And, I liked the clients I had, and they were easy and they were um, quiet, I guess I'd say, right? Like there
oh,
wasn't a whole lot of putting money in, taking money out, having lots of questions. Can you deal with this? Can you deal with that? It was mostly just autopilot for most of them. I mean, it'd be quarterly withdrawals once in a while or contributions, but there wasn't a whole lot to do.
now
And I
was that
was kind
active
of the
trading?
risky portion of their portfolio is how they thought of me, right? And that's how I wanted them to think of me.
Right. Now, were
Uh,
now was that active trading though, or was that still more longer term stuff?
that was a combination, right? So uh, I would do active trading. There was, the long-term stuff for me has never been, more than a few months. I don't have, I've never had many long-term gains, right? Like from a tax standpoint, I'm not holding on to stuff for years.
Right.
Um, when I get a sell signal, I get out and I move on to the next trade.
Huh.
So, sometimes that's been swing time frame where, I'm going to trade for a few days. There was a period of time where I liked day trading, and sometimes it's, weeks or months. But I didn't, unfortunately, I didn't buy Apple in 1990 something and still hold it, or you know, Google when it first came out, and still hold it.
Right.
I'm an in and out guy.
Yeah. Well, no, when you said that it was they were relatively quiet clients, that brought to mind one one guy that I used to have a lot of interaction with years ago. He ran his own brokerage firm, and one of his biggest things was how he hated managing other people's money because they were constantly bugging him whether the markets are going up or down or whatever. He said, "I just wanted to shut up and let me do my job," but they're always wanting to meddle and say, are you doing this? Are you taking care of that? Why do you do this? Why do you do that?" It's like, just leave me alone. I know what I'm doing.
Well, yeah. But even that, I don't mind so much answering the questions. And the nice thing about having like a newsletter now,
Right.
I didn't have that when I first started, is that all of my clients these days that I have through Capital Advisors 360, I provide the quantifiable edges letter to them.
Right.
So they have an idea of, what my thoughts on the market are and what I'm doing, and they can check that out at any, every day if they want. So I end up not having a whole lot of questions anyway. I do, when they're having thoughts about the market or, and I enjoy interacting with them at this point, but it's not there's not a whole lot of, oh my God, the market just dropped 3%. Uh, what's going on? Do I panic? Should I get out? The kinds of things where,
Yeah.
uh, some people might uh, have that kind of interaction because their clients don't hear from them very often,
Right.
right? They're hearing from me every day in some form.
Yeah, that's that. Yeah, I'm sure that goes a long way to, yeah, keeping things settled down. That's good. Well, so
Yeah.
as far as sharing your research and ideas, publicly back in 2003, what prompted that?
Um, well, I had the small firm. I was trading for myself, and I thought, I'll just get my name out there a little bit and see where it leads to.
Okay.
And I wasn't sure what I wanted to do, but blogging hadn't even really started much at that point.
True.
I started writing for tradingmarkets.com because I used to read them a fair amount. It was Larry Connor's site, and Dave Landry was on there, and a few other guys that I liked a lot. And so I started writing for them,
Yeah. Now
and I did that for a few years.
yeah, you were writing for them like weekly, right?
Yeah, I think it was twice a week even.
Yeah.
Um, which I did for 4 years or so, um, and then I got sick of uh, just putting together the reports twice a week, and I didn't get paid for it. So I'm like, why am I doing this?
Right.
So then I started quantifiable edges a while after I stopped doing that. I took a little break from writing, and then I wanted to get my ideas back out there. I've always found that just putting ideas out there gets you a lot in return,
Mhm.
right? There's a I think it was due to the emergence of hedge funds, or maybe just um, a lot of people in the industry feel like, hey, I've got this secret way to trade. I don't want to share my secrets. And I've always kind of been thought the opposite of that, where most of the research I have has probably been thought of by someone else at some point, and maybe by a lot of different people. And so when I've done research, I've often shared it, and then the feedback I've gotten has been invaluable to me. Oh, Rob, I see you did this. What about this? Or what about that?
Mhm.
Um, or some people will just offer up, hey, I did this. This is similar. Check this out. Or, and it helped me so much over the years to kind of look at things from many different angles.
Oh, yeah.
So it's something that I've always done and continue to do, and I've gotten great value just from being open and sharing, much more than I would have from holding things secret. Because I don't trade in like penny stocks or small caps. Even I trade in indices. I trade in highly liquid ETFs, and I trade primarily in S&P 500 stocks. So I'm not moving the market with anything I say.
Oh, yeah. Well, yeah, and as far as specific strategies, I mean, if you think about it, trading's been around for a long time,
Yeah.
and unless you're coming up with some like really something just earth-shaking, somebody's probably tried it somewhere along the way, or something similar to it. And so, I mean, because there's only so many ways you can spin getting in and out of the markets.
Right.
And so, yeah, if you got a good idea, it's like cool, and yeah, you can put it out there, and there's like millions of traders. So it's like even if 100 people, even if 1,000 people do it, that's still just a tiny fraction of everybody. And unless you get somebody, yeah, who's trading 100,000 contracts at a time that borrows your method, it's like, yeah, this is not going to have a huge influence on things. You're not going to hurt me by doing something similar. So yeah.
Well, even if they do take my method and use it, one thing I learned from Larry Connors many years ago, I had a system I developed, and I was thinking of, hey, should I share this? Should I sell it on the site, right?
Yeah.
And he's like, yeah, why wouldn't you? And I'm like, well, I don't know. It seems like it's like a really good idea. I don't know, do I want to share this? And that was, way back when. And he said, listen, if 50 people buy this, they will trade it 52 different ways. Like no one's going to trade this exactly as it doesn't matter how accurate you are with it or how good it is. Everyone's going to put their spin on it. No one's going to trade it exactly as it is. And it's so true. Like, if I told you whatever, 2-day RSI systems or something like that, right? So let's buy the S&P when it gets down to this level and sell it when it bounces to here for a mean reversion system. You'd look at that and say, yeah, that looks pretty good. And then you'd say, well, what about if I, added a 200-day moving average, or what if I adjusted this, or what if, and then you'd end up trading it, slightly different than however I trade it.
Yeah.
So no one's taking your edge if by sharing something,
Yeah.
unless it's in some
Very true.
micro cap, I guess.
Very true. Very true. Well, so you started your site in 2008, and what prompted you to write the book though? Your book came out around 2010, right?
Yeah. Um, I'd done a lot. So the book is just the Quantifiable Edges Guide to Fed Days, and I'd done a lot of studies and published a lot of research around trading around Fed days.
Right.
And so I just thought, hey, why don't I just compile it all and put it together, and then I can release it as a book, and it'd be nice to have something to give people, and that people can hold in their hand and read, as because I'm not sending out the nightly subscriber letters via Paperboy or anything.
Right.
So that's what got me to put together the Quantified Ledger Guide to Fed Days.
Huh.
Uh,
Very cool. Well, I haven't read it yet, but the reviews are looking good on Amazon, so kudos. And
Thank you.
well, no, one thing I
I'll
learned.
be happy to share it with you.
One thing I learned a while back is a lot of times you can tell if a book is worthwhile just looking at the review count. And if a book's been up there, for a little while, it's got a lot of reviews, and as long as it's like like four stars and up, yeah, probably worth taking a look at. If it's like close to five, yeah, okay, cool. And so yeah, yours done pretty well. That's excellent. Um, Now, as far as your nightly newsletter, that you when we talked before, you said that you're like approaching Cal Ripken as far as your steadfast,
Yeah.
committed to publishing that like daily. It's like been 16 years, right?
Yes. It started in February of 2008. And yeah, like I was telling you, I looked up Cal Ripken's streak, and it was something 16 plus years. And I think I'll get to pass him in June if I can keep publishing letters every night until then.
You're this
Because
close.
I haven't taken a night off from it yet. So, I've always been able to put out something, which has become a little bit of a pride thing for me at this point.
Oh yeah.
But it also is a pain in the neck sometimes when the market moves sideways all day and does nothing, and I got really hardly anything to say, and I gotta come up with something, even if it is I got hardly anything to say tonight, right? But
Yeah, sometimes it goes that way. Well,
right.
now, in your newsletter, are you mostly speaking to just what's going on in the markets, or do you also maybe sometimes, go a little off topic and talk about like psychology or maybe philosophical kind of stuff or life or that kind of whatever? Do you vary? Do you mix it up a little bit, or is it pretty much always just to do with the markets?
No, I don't get into that stuff so much. I will post that kind of stuff once in a while, like on the blog or whatever, but uh the letter has a kind of a strict format. It's pretty quantitative, and maybe I'll put a personal note in there once in a while, but not too often. I'm looking at uh, market studies I've done, and I'm always trying to come up with new ones as well. I have a little tool I call my quantifinder,
Okay.
and so any study I've done in the past that still seems relevant will appear on my website each day in this what I call the quantifinder. So it's just got a little link to, hey, Rob wrote about this in January of 2022, and if you click on it, it'll take you to that letter, and you can read on it. So I use that for myself to see, hey, is anything popping up that I've written about before, and then I can go back and re-research it and check on the study and update it. So I have, I don't know, 1,400 or so studies
Wow.
that I that are in the quantifinder right now that that I check periodically. So there's normally something to talk about.
Only 14.
Uh,
Really? Slack.
yeah,
That's a lot of work, man. Well,
yeah.
now but you like uh, keeping things technical and pretty mechanical. What's your take on the psychology of trading? Because a lot of people, they hold the perspective that so much of trading is, it's just in psychology, and that's like where 90% of it is. What's your take on the technical aspects of trading versus psychology?
So it's interesting you asked that. So for me, uh, initially, like I said, I traded like can slim type trading, right? Back when I first started off.
Okay.
And one of the things I struggled with there was, uh, I was pretty good about knowing when I wanted to get out of positions if they were going against me.
Right.
But when they were going in my favor, that was when I tended to get anxiety. I had winner's anxiety. I mean, there's loser's anxiety when something's going against you. Oh, crap, is this going to turn around? But also winner's anxiety, like, should I get out of this before it turns the other way, right?
Oh yeah.
Um, so that's why I wanted to be more quantitative in my approach. So I began doing a lot of studies, and that's kind of what led to quantifiable edges. I started doing studies every night, and it was more for me from a psychological standpoint. Hey, I know I'm in a position now, or I'm in a bunch of positions. I'm either real long or I'm real short. Should I stay in them?
Right.
And the market made some crazy move today. Should I still be in these things, or should I be bailing? And so I would run studies saying, all right, this is what the market did today. This is what it's done leading up to today. And where's the edge? And if it's opposite of where I am, then good time to get out. If the edge looks even bigger than it did the day before, maybe I want to load up more, right? So my when I would have really good or really bad days, uh, doing the research each night kind of brought me back to, all right, this is reality. This is where things are at. You're in the right spot, or you're not in the right spot, but you can adjust, right? So um, that's where I was able to keep my sanity. It was, all right, I know what my edge is, and now I can focus on that rather than I hope this turns around. I don't really know the math behind where I'm at. So when you know the math, it makes it so much easier to say, all right, I'm in it, or I need to get in it, or I need to get out of it.
Yeah. Well, you touch on something that to me is huge for traders. And when you and I talked before, you had mentioned that your time outside of the normal trading hours is your most valuable time. If I remember correctly, that was your
Yeah.
comment. That's really where your money's made. It's not during market hours. It's in your prep time and your review afterwards and that kind of work. So that's that. Yeah, to me was just gold because so many people forget trading is a decision making process. Of
Right.
course, we're buying and selling securities, but in its essence, it's a decision making process. And so being able to evaluate your decisions and how you're going to make them when you're not in the heat of the moment really can be invaluable in the heat of the moment because you've already thought it through when you're in a nice calm state of mind.
Yep, exactly. So, um, there are some people that are really good and really thrive on that, um, looking for intraday patterns, right? But
Right.
if you're not looking for intraday patterns, then you might as well be ready for everything before the market starts, right? So I know what securities I'm going into at the open or getting out of, and same thing if the market does this during the day today, I'll be looking to add or subtract the positions near the close. Um, and yeah, so my money's made during market outside of market hours, like doing the research, setting up for the next day. And all I do during the day is just execute on it, and then whatever projects I come up with, right? Like, or customer service, or making adjustments to the website or whatever it is. But I got the screen on, but I don't need it on. I'm not going to make any change,
Right.
uh, at noon or whatever. There's no trades going on for me at 1 o'clock in the afternoon unless they're limit orders that I put in the night before.
Right. Yeah, very cool. Well,
Yeah.
that does sound like a much more relaxed way to trade.
Well, so that's the other thing about trading psychology. Like, the numbers bring me back to where I'm supposed to be, right? And I know what I'm supposed to do. But you see people, push mechanical systems or quantitative approaches that say, take all the stress out of trading, take all the anxiety out, and it doesn't take any, it takes out the anxiety of what am I supposed to do, but it doesn't take out the stress of my account's down or my account's way up, or hooray, like I'm excited. Like, that is still there. You're never taking the stress out of trading if a trade's going against you. You want them all to work. They're not all gonna. You're gonna have for me, each year something around 70% of my trades work. So 30% don't. And
Right.
it's not a matter of I did something wrong on those 30%. It's just, there isn't a lot of methods that are going to make money 100% of the time.
True.
Uh, if they do, you're probably an inside trader.
True, true. Well, now as far as at your site, quantifiable edges, I know you got several courses, um,
Yeah.
and you've also got your membership, right? So, tell us about your courses in the membership, and what how you developed them, and as far as what your intention is as far as how they're going to help traders.
So there's three courses really uh, oh, that I have. One's I call my market timing course, and it's a fairly simple course. It looks at just a few indicators, and it's dedicated to long term. And for me, long term means most of the models in there might trade once a month at most, right? So that's long term. Um, and that actually comes with uh, a membership. If anyone has like an annual membership, you get that. I also have code to all that. So I code in AmiBroker. There might be TradeStation code available for some of that as well. I think the market timing course is TradeStation code, because I did that a while ago, and then I updated it last year, so it's got real test code as well. I like real test as well as AmiBroker. So anyone can take those, and like I said, no one's going to trade it exactly like I do. They might make their own little tweaks, and with the code it's easier to do that, right? And they can play with the ideas
Right.
more so for yourself. The swing trading course is focused on trading for 2 to 10 days. Most of the edges look at, and that kind of takes a big picture look at the market, and looks at when the market does this, what has it done afterwards. So it's a lot of big spreadsheets that say, all right, if we use Bollinger Bands, how's the market done when it's below the bottom band or above the upper band or in the middle of the two or around its moving average? And it's got a bunch of spreadsheets that show, hey, 1, 3, 5 days later, this is what's happened. And you can also break it out by what if it's near its upper or lower band in an uptrend? What about in a downtrend? And we can define uptrend and downtrend in multiple ways. So you do that, and it looks at a bunch of indicators, RSI and Williams percent R and things like that. And then it's got some additional stuff in there on uh, building some simple models, and looking at things like the Fed. There is a section in there on psychology of trading, and I have Brett Steenbarger in there. I did an interview with him, and he talks in that section as well, which is neat. He's a lot better than I am with psychology stuff. And then the last course is the VIX course, and that talks about trading, how you can trade VIX options, VIX ETFs, and VIX futures.
Nice.
And it looks at edges around the VIX. So for people that are interested in trading VIX type securities,
Right.
which I personally do a lot of, that might be worth taking a look at.
So what is it? Why do you like swing trading versus day trading?
Oh, well, day trading, you got to look at it all day, right? You kind of got to, you got to pay more attention. Swing trading, I like being able to run my models at night and then enter the trades at night if I need to, and then see how things played out and run the models again, the next evening, and then I can get out of my trades the following morning or get into new trades the following morning. The adjustments don't have to be made during the day; they can be made at night. So theoretically, if I want to do other stuff during the day, I can. I'm not tied. I'm not chained to the computer. And that's probably what's allowed me to, like I said, I do it every day, every night for 16 plus years. But if you're at the computer all day, every day, that's just that would kill me.
You got to love it, or yes, it can get taxing in a hurry. So, oh yeah.
Right. Yeah.
Huh. Well, what is it you like about the VIX?
I've just found that there's some real, tremendous edges and some, with trading the VIX. For instance, the VIX ETNs, if you look at them historically, or even VIX futures, if you look at a continuous VIX futures chart, what you see is that they've come down, 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 down over time. So there's a real bleed to them. So there's generally a short volatility edge, and that's a persistent edge that's out there. Now um, it's not a set it and forget it type edge. Being short volatility, you can have the market go against you real hard, real fast. A black swan event happens, and there can be blow-ups, like happened with XIV, was a VIX. Can't remember if it was an ETN or ATF, but back in 2018 during what they called Volmageddon or Vixplosion. But understanding when that short side edge is real prevalent and when it isn't, and that's been for me my favorite trade over the long run. So I've made a lot of money with that, and I've adjusted or explored further over time. So now I trade long vol as well, and I've got some kind of strategies that I trade. I don't cover all of these in the course, but I do some options, VIX option calendar trades and diagonal trades and things like that. So I find it an interesting area, and it's largely misunderstood as well. People think that the VIX should be doing one thing when really, doesn't necessarily have to do that. So, for instance, the bear market of 2022. A lot of people on Twitter and other places that I read said, the VIX hasn't spiked to 40 yet. It's got to spike to 40 if this market's going to bottom. And the VIX didn't spike to 40 because actual volatility never got that high. It wasn't a panic sell-off. It wasn't like the COVID crash. It wasn't like the great financial crisis. it was, the market's doing bad because interest rates are going up. Like that's scary to who, right? Like,
Yeah.
I mean, it sucks that they're going up if you're trying to get a mortgage, and it might suck for some banks. But it's not the zombie apocalypse that COVID was preaching in March 2020, right? So there was never a point where you're seeing the market go up and down 5%, 10% during the day. It was a more controlled sell-off, so you're going to get a lower VIX reading.
Yeah. How funny. Well, changing topics here just a little bit. One thing I always have to ask, because this is the Consistent Profits podcast, what do you see as probably one of the primary obstacles that traders run into that keep them from realizing consistent profits?
Uh, Probably not adapting to changing market conditions, right? So if you have a strategy that works, you need to understand under what conditions is that going to be performing best. Uh, I'll give you an example for my own trading. Like I said, I started trading in the late 90s, right? And that was the internet boom, and IPOs were coming out like, you know, pets.com, and I can't even remember half of them, but the IPO is priced at $8 and it opens the first day at 18 and it runs up to 56 and then the next day it's trading at 72. This sounds ridiculous, but it was happening over and over.
Oh, yeah.
So I developed a strategy back then. I called it my second day runner, right? So any IPO that would gain over 100% the first day, above its IPO price. If it moved above the high of the day one trading on day two, I'd buy it, right?
Okay.
And I'd hold for sometimes minutes, sometimes the day.
Right.
And that was just a great strategy for me. It would, as soon as it moved above it, just a rush of people were going into it. And I made tons of money on my second day runner IPO strategy. Well, then 2000 happened, right? And there were no IPOs. And when the recovery from 2000 happened a few years later, there were IPOs, but nothing like that. No one's IPO prices are doubling and tripling day one. So that strategy I haven't traded since like 1999. So yeah, it was a genius for a few months there. But you need to adapt to market conditions and understand that it's not going to, your favorite strategy might not be your favorite strategy forever. And you need to understand, when the market's likely to give you profits and when it's likely not, and take what it gives you rather than try and press too hard on things.
Oh, yeah. Yeah. Good advice. Good advice. Well, we need to go ahead and wrap things up, but thanks for taking the time today, man. This has been a lot of fun and very worthwhile. And as far as for anybody that wants to connect with you, so quantifiableedges.com, probably the best place to connect with you.
Yeah, you can email me at support@quantifiableedges.com. I'm also on X, right? It's Twitter. Um, and my handle there is at quantifiable edges, although it's smushed a little because it couldn't fit all those letters. So it's I think there's one E and smush the edges together. But you can look up Rob Hanna and probably find me on Twitter, or start typing out quantifiable edges, it'll come up.
Okay. Well, yeah, I'll have all your links in the show notes in the description. So
Okay.
yeah, but okay, very good. Well, I appreciate you taking the time, share your wisdom with us, and everybody that's listening. I appreciate the fact that you took time out of your day to learn and grow as a trader, not just keep chasing strategies all the time. But yeah, focusing on yourself, and if what Rob shared with you today, if what he has to say and his attitude and his perspective, if they resonate with you, go ahead and swing by quantifiableedges.com and go ahead and check out his site and connect with him and seek out his help. Don't just listen to the podcast and say, "Well, that was cool," and then it's disappears from your life. If trading is definitely a game of skill, and so the more you pursue good help in learning, it'll definitely benefit you. So yeah, act on what you learned today if it, like I said, if it resonates with you. So, and again, Rob, thanks again for taking the time today, man. It's good to have you on the show.
Thank you. It was great talking to you. I really enjoyed this, and yeah, like you said, people can feel free to reach out. I'm happy to answer questions and talk to traders, and like I said, I've learned a lot from traders over the years, so I'm happy to give back to some.
Cool, very cool. All right. Well, everybody, if you enjoyed the podcast, make sure you subscribe, and we'll see you on the next episode of the Consistent Profits Podcast. Talk to you soon. Cheers.
Bye bye. Thank you.
Thank you for joining us today on the Consistent Profits Podcast, brought to you by Inside Out Trading. Make sure to swing by InsideOutTrading.com and pick up your free copy of Break the Cycle, 10 things you can do to stop reinforcing the past and get your trading on the right track. If you enjoyed the show, make sure to subscribe on your favorite channel, and we'll see you on the next episode. Cheers.